All right, check, check, 1, 2. Looks like that mic is coming through all right. Thanks for tuning in. Doing a bit of a pre-market setup for the Euro session. I traded Asia this morning, and Hong Kong market's been moving quite a lot, so that's been a bit more interesting to trade. But let's go through the process. Just let me know if the mic is working or if it's not. Appreciate the comments. And let's take a look. Let's have a look at DAX. So I've got the German DAX. So I've got the futures contract here. Just having a look at the daily chart and the 60-minute chart. I think it gives us a good kind of overview for what we're going to be day trading in. One of the more difficult aspects of day trading the 5-minute chart is that you're at the whim of, you know, much larger forces. I think the daily chart, weekly charts, just a lot of big institutions who trade higher time frames, and there's just more of them on that chart, on the bigger ones. So we're in a bull channel. Everyone can see that. Higher highs, higher lows. So what do traders do to trade a bull channel? Well, if they buy, they know they're buying with the option to buy lower, because they know this is how channels work. As the channel goes up and reaches a new high, traders that got in earlier are taking some profits off. And then when it's pulling back, they have the option to add on. And usually high ones and high twos are where the trade's set up. Some traders wait for consecutive bull bars above the moving average, buy, or they wait for the pullback, buy signal. But this this trade was interesting. So if you bought here, bought one tick above this bar, stop there, you literally to the tick got out 1 to 1. Okay, so you got a new high, bull channel still going, happy days. We're now at a 50% pullback. So what I'm going to do is I'm going to draw a line, call that 50% pullback on the daily chart. This is the line in the sand for a trend. If we're going to spend a lot of time down here and lower, then this is going to operate more like a trading range. And in a trading range, traders are betting that breakouts are going to fail. We're going to go past the swing point, come back. We're going to go past the swing point, come back. Whereas traders here and here and here and here are betting on new highs. And if they don't get it, they're going to exit and reassess. So on the daily chart, we don't have a buy signal yet. And we don't have to form one. Sometimes it's so aggressive that it doesn't need one. However, this is aggressive. And legs that come after it should be a little bit less aggressive. You can see already the size difference is about half. So we've got 3 legs up, and it might be that time where high ones and high twos on this chart fail. So let's get rid of that one. If I zoom into the 60-minute chart, what am I looking for here? Well, I'm looking for any spikes that failed. So I've got a fib here. On this fib, I've got a 50%, and I've also got a 1/3 and a 1/3. The setup, you know, 0, 1, half, minus a half, 0.25. And I'm using that because this is a handy tool if you use this technique to look at spike failures. So what I do is I'm putting my fib underneath this spike. And I'm saying this should go up higher. If it breaks down and forms a range and we break out of that range, then the target is down here. And you can see that's what happened. We broke down. Now the reason I've left this up is because can you see where price came back to? So when a range breaks down, often it pulls all the way back, not only to the entry point, but actually a little bit higher, so that traders are able to take a possible 2 to 1. Doesn't mean it's going to work, just means you have a chance at it. And what we do as beginners is we wait for these prices to become bullish and we buy here, and then boom, see you later. Whereas bears didn't sell here, All right, the traders that are in here were short up here. Those traders get out. That's the first sell signal. Anyone who takes that's going to take it small. But most traders were waiting for the second attempt and that signal bar. And when that formed, bang. So part of this process is looking at really strong spikes. Oh, g'day Atomic. Thanks for joining in. Looking at strong spikes and looking at where they came from. So that was the swing down. And you can see we're hovering around this price. This is also another concept called pullback measured moves. So you can look at where a pullback is and kind of guesstimate where you think the move's going to be. And we're kind of oscillating around this price. So I'm just going to leave that on the chart. And you can do this with any spike. Look at a spike. Same again. So if a trader sells here, what they're saying is this is going to break down and they're going to go for a swing. So those traders got paid. Now, as it's squeezing into price here, we're going to have to zoom in more and more because it's impossible for us to really see what's going on here. And that's what the trading range is. A lot of swing traders who are already in are no longer taking sizable positions. They're mostly exiting or managing positions. And it's usually the other side that's doing most of the work. If we zoom into this spike, I'll just get rid of the bar numbers for now. It's just a bit annoying, isn't it? Just a little bit annoying. Okay, that's a bit easier to see. So now, let's look at a new spike. So if this is a bull move that failed, and traders want it to go down there, somewhere there. I'll just move my line up. Every line is more of a box anyway, so that's where it needs to go. G'day MSH, thanks for joining. We've had 3 legs already on the daily. Should one expect 10 bars, 10 bars, 2 legs pull back on the daily? Yeah, perhaps. I mean, it's a bull trend, so when it comes time to look at the daily chart, I just want to make sure that I'm still doing what the daily chart's doing. So if I go to 24 hours, so it's still a bull trend and traders are buying the moving average. So I'm not going to be the first bear to sell the moving average. I think any of the bears who were short here took the short up there. The question you're asking yourself now is, okay, well now it's 3 bear bars. Can I sell here? Well, generally I would not sell 3 bear bars in a bull channel. That's usually the best the pullback gets. The swing point for these bears is questionable. Was it there? Is it down here? I think it's a little bit uncertain. You could say technically it's here because we had a pullback and then a new high. But look at how strong price moved from this swing point here versus here. So for me, this is the major swing point. Whereas if a major swing point breaks, then I'm more interested in selling below that because that's a big failure. So at the moment, because we've got new highs, bears need to make a lower low, which is all the way down here, which is a bit of a problem. So it might be the best they get is a double top, but we shall see. We shall see. So here's a range, and so if a bear's selling, they're looking for 19,385 area. They're just expecting every time we form a range, we break down. Range, break down. But if you look at the 15-minute, a little bit more interesting here, that was, can I get that measured move target out of the way for now? Whatever, put it there. So here we're getting new lows. We got a higher high, then we got a new low. So now we're in a trading range. So now this system of breakout, range, breakout, range, breakout. Now we've got breakout, range, failed break below, failed break above, failed break below. So now we've got this expanding triangle behavior where we're just going to usually expand the range up to here. We don't have to reverse from here. Sometimes it can break out, form a range, and that's it. That's what the bulls would like. But at the moment, I think we're still operating in a bear channel. So I don't really want to buy too high. If that made sense, that kind of process, I'm going to use that style a little bit more today. My regular scalping style is a little bit hard to talk through at the same time as doing it. But this swing style is a little bit easier. So trading range price action, that means strong move, big reversal. Strong move, big reversal. The other way to spot a trading range is the distance of the pullback. Here is a spike down. Pullback comes to exactly 50%. Pullback is now 2/3. What about this one? Pullback is above the high. Okay, so definite trading range behavior. I'll get rid of that. I think the most important one is that. In terms of what's the most important magnet, that was the new low. That's where this started from. So some traders will use the lower high, which would be above that bar, or use the top of that spike. So here's our little box for the open. We want to see what happened to that box. If we're looking at the chart on the 60-minute chart over here, bear channel, I don't want to be the first bull to buy above that moving average. Yeah, trading ranges are always tricky. What's your process to trading them? I'll just get my pointer. Yeah, it can be exhausting, for sure. And sometimes it gets me that way as well. Now I actually enjoy trading ranges. I think it helps to understand what's happening, that it's not just me that's upset or frustrated. Actually, everyone's frustrated and upset. The market's not behaving the way swing traders want. Doesn't matter whether you're long or short. Traders want to sell a pullback from a bear spike, and they want it to go down 100 points, but it goes down 30 points, comes back above their entry bar, then goes down below, and then comes back, and that's the behavior. So let's get some broader targets. Well, if this is a spike, that's the last bear spike. If that fails and goes up, then that will be the target up here. But I think it would be better to break the high, come back, and have a shot at that. That's also quite a distance away. 146. So that would be like bull trend from the open, rock and roll. Let's get that one there. Let's do the opposite, which is this is a big bull spike, which is going to fail. Bye-bye to the bulls. Okay, so now we have our range for today. Okay, if this fails, that's the target. If this fails, that's the target. What's the most likely outcome? Well, most likely outcome is probably spend a bit of time in this channel. So that's a channel. And I don't want to do anything too far away from the midpoint. So if I want to buy, I want it to break out and come back for the buy. Or I want it to launch past the extreme and fade back to it. But that's going to be important. What I'm going to do is get rid of that, turn that off. You can always use the moving average as well for part of that channel. So if that channel is going to work, there'll be some breakout and then we'll pull back nice and deep, get everyone scared and then disappear up that way. Or what's been more common lately is just see you later, it's just another pullback. If you don't like drawing channels, just draw a line right through all the action. So that's also a channel line. So you go, okay, well, the safest place for me to do anything is at that line, but it's also the worst place to make money. The best place to do something is probably here, which would be a sell. Betting that it's going to go back to that line. But you're always going to be uncomfortable because right now you're selling the two biggest consecutive bull bars on the chart. So if this is a trading range, that will be a sell. I'm not going to just sell for the fun of it. That would be the buy zone somewhere down there. So that's probably what's cracking on the DAX. Let's have a look at my favorite, the FTSE. Don't know why so few people trade FTSE. It's very similar point count to ES, moves almost exactly the same. I mean, if just don't understand. Everyone loves DAX. I also love DAX, but FTSE's got a special place. So tight trading range on the weekly chart. So we know when we zoom down, we're going to find this stuff that doesn't make any sense. So that means this time frame is untradeable on the daily chart, and then we're going to have to go down many time frames to find something we can trade. If you're a computer, fantastic. Otherwise, see now we've got moves that are lasting, 3 to 5 bars. So the 1 hour is the highest time frame you can probably trade on FTSE without going bananas. So what do you do here? Broke out of the top of a channel, broke out of the bottom of a channel. Feel like that's an important point. Big gap up, strong spike, overnight buying. So now the question is, if I scrunch that chart up, what's the measured move? Someone want to tell me what the measured move is? Similar volume. Yeah, FTSE and DAX have got plenty of volume. Sometimes the broker, that's why I don't use the volume profile or a volume indicator, because sometimes it says it's very, very small, but it can't be. There's just too many institutions that trade it. It says there's 115 contracts, but which wouldn't service our whole trade room, so it doesn't make sense. Where do we think the measured move targets would be here? If you've got TradingView, you can click this little button and hit copy link and post it, I think, in the chat. Otherwise, Oops, mute was on. I think we're already at one of the targets of the double top. Yeah, what line? So if you're looking at this chart and you're trying to get an idea of where we're heading, just in the interest of time, I think the first one is this range. Now we can refine these as we go. For now, we're just getting an idea of direction. I think for me as well, this bar is important because this was a really strong buy signal. That should have been like, see you later. So now I think there are bulls who will scale in there. This is also the low of the next range. So this is probably a hot little target for the bears. Is it too far away for today? What? Oh, come on, shift. Oh, shift doesn't, there we go. I was going to say shift doesn't work with this pointer. 75 points, it's doable. Yeah, it's in range. If it was going to be bearish on foots. So that's the bear case that's going to break down. What's the bull case? Well, the bull case is the opposite. All this is just going to flip mode squad and go up here somewhere. So all these bears that are selling up here are going to get cooked and will go up there. And then what's the middle range case? Well, middle range case is we don't really break below, we don't really break above. And if we see that and we try and take swings and they don't work, then we'll just switch into trading range stuff. Buy low, sell high, scalp. Don't get upset. And that's a really key part of trading that I struggled with for many years. Trying to get a full size swing on early, and then you take a larger loss, and then all the bar sizes shrink, and you've got this huge loss that there's no way you can get back out of. So you know you're going to finish down on the day. It's just a question of how far down. Don't know whether anyone else has that same experience, but that was certainly mine. Okay, so now if we look at the overnight, a bit of a different story. This bull spike that was meant to go down, down, down. See how it went down and it pulled back to that perfect 2-to-1 area? And then suddenly we're up here. So now that measured move might be cactus. That might be the end of that. Because it's giving the swing traders just too much time to get into it. I think more likely we're in this range. So what's going to be easier to trade this morning? What will be easier to trade this morning? 8291. So you can see we're already back in the middle of yesterday's range. Let's look at the overnight for now anyway. I mean, that's the great thing about trading futures is you get two versions of the truth here. Abso, g'day Abso, thanks for joining. And hi Richard, how are you? So deep pullbacks, even in this little spike here, you can see pullback 75%. Okay, so If you're looking at buying, you're just not going to look to buy unless you're happy to buy there. And that's why this bar just launches down, because everyone goes, oh, okay, well, if I want to buy, I can't buy up here, I've got to buy down here. Do I want to buy in the middle of this trading range? Not really. Not really. This whole range is basically a daily range, and I think we'd be better off looking for something at these two thirds. So I think that's where we're going to be playing for FTSE today and for DAX. Let's just have a look at the overnight just for fun anyway. Why not, hey? Got a bit of time. Yeah, so that's not a lot of fun to trade on the 60 minutes. So I'm actually just going to get rid of that 60-minute chart. I mean, look, if it's going to go up, it's going up there. If it's really going to break out, that's the full bull trend, as we said. So what I'm going to do, I'm going to switch to a 15-minute chart. Oh, it's a bit more relaxing. I'm going to switch that to the 5. So I'm not beholden to any time frame. You know, whatever makes sense. Happy to use that. So this doesn't really make sense on this chart anymore. When I sell below bar 7 in FTSE, no, that's why I've got the green box there. So what it's saying is that these are always pulling back 2/3, so that's a buy zone, so it's a place to exit shorts. So the short was a limit order up here with a stop up there, but can you see how it's one risk to half a reward? So it's scalping, and you've got to have a good hit rate to do that all the time. It's often just better to wait for something to set up. This was a failed breakout of this, and that means if we go below here, rather than selling down here, it's probably going to be a failed breakout below there. That would be more in line with this. If it changes and this turns into some kind of a wedge top, lower high, then the sell might be back up there, if that makes sense. Someone asked me to put both on the same screen. It's just a little bit confusing for me to trade them that way, so I'll just do my best to flick between them. That's all right. Okay, we're opening in 10 seconds. I mean, technically, technically the pre-market's open, but I don't do too much in the pre-market. So market's looking for direction. So breakout, close the gap, breakout, close the gap. On the higher time frame to whatever I'm trading, I'm looking to see swing points. If I'm selling on the way down, we go above my swing point. That's my exit. So we just tested the other side of that. That might be a smaller target. So we're just sitting on top of where the stops got hit. So if you're in a trading range, right, instead of pulling your stop down, if you go above a swing point, usually that's where you add on, instead of in a trend adding as you go. In a trading range, you wait for it to go past an extreme. That's usually an add position. And then if you're not happy with the add, you usually get a chance to get out. So if I'd sold more there and I saw this, I'd be like, nah, I need to get out of that. That's way too much buying, closing above my entry. They want to pull back to add on more to their position, and I want to pull back to get out of my position. And it's like a bit of a handshake. So we're in the green box. Can you just keep zooming down time frames to find something you can trade? You can, but you're also in the middle of this trading range. So if a stop entry triggers, it'll usually come back to it. So if the buy triggers, it'll probably come back. If a sell triggers, it'll probably come back. And so that can be one way you can find some relaxation, no matter how good it looks. You know, big bull bar above the moving average, takes off sideways, goes down below it, comes back. This probably needs a second leg. So limit order trading, they didn't even wait for a signal bar to buy. In trends, traders wait for the bar to form and then decide what to do. In trading ranges, they just put the limit order there. Oh, it's a test of a breakout point. I want it to go higher. But if I buy up here, where's my stop? I don't really want to put it there. My target's here. Turning into a big bar on FTSE, isn't it? It's making us buy in the top third, which is not where I want to buy. Let it go. So a trader buying in here has a stop down here, 20 points away, and they'll probably buy more underneath. I'm going to let it go. I'll wait for something with a better signal bar. The other way to trade a trading range is to buy below bull bars, sell above bear bars. So that trade would look like that. You'd be selling down here, betting you'll get back to the moving average or 2 to 1 up there. How did DAX close? Okay, so DAX got a big bull bar. It's the only way you could make it work is to buy it with a stop below. But having a stop at the moving average is usually a bad idea because traders love the average price. If you've got questions about the Brooks trading course, concepts, things like that, feel free to put them in the chat. I'll do my best to try and answer them. A lot of material, huge amounts of material. I was trading Hong Kong this morning. So Hong Kong has had this just monster rally on the weekly. It's just insane. And so everyone's waiting for the pullback to buy. And what happens on the way down is, you know, traders are not sure where the pullback's going to stop. So I saw this bull bar, this small bull inside bar on the daily chart yesterday. And I was waiting for a good signal bar. And I saw this bar here. And I thought, you beauty. That's a good enough bar for me. We just broke a lower high. We've come back. We've now definitely got a higher high. Here's a higher low, and here's a good looking signal bar. That was my swing. So I bought, and it rejected 1-to-1. And I thought, oh, okay, no worries. We've taken out some highs. And I went to the shops and came back, and I missed this bar here. And I thought, oh, okay, well now I'm kind of stuck because I've got to wait till it comes back to my entry to take a look. And then we formed another bull bar, and I thought I'll let it go. I'll scale in lower. So originally I had a scale in down here, and I thought, no, I'll buy in the lower third, which is where I got a chance this morning. So I bought the lower third to get back to my entry. And you see how it rejects my entry once it gets there. So that's a sign that a lot of traders took that trade. They're disappointed. It's not so bad that I had to buy below it. See how I had an order there, never got filled, and I was looking at it, and this was just whipping up and down this morning. Here, this stuff. Look at this. Just whoosh, whoosh. Every bar was like, man, I was like, you know what? I don't want to be in this. This is going to go a big distance. I removed my scale in from there. I was like, I don't want to be buying at support. I want to buy in the third here. And if it goes down here, I'll just, you know, you just take a loss on the first position, take 0 on the second, and just wait. But then it just couldn't break. You know, we're talking 1 bar is all it needed. And then it just did this. Whoosh, see you later. So still trying to look for a swing, but also, you know, you scrunch up the chart, man, that could go on for days. So, was this the greatest buy in the world on FTSE? Well, we really want a second consecutive bull bar there. DAX is pretty happy. That's a bear bar. Okay, so consecutive bull bars on DAX. So it's a buy, but it's with a wide stop because your target's so close. It's too close for me. FTSE, bad follow through there. So trading range, I'll wait and see what happens. Is Nifty... It is going breakout mode. What should be the approach? I like to wait for a clear direction. Yeah, that's a great approach to Nifty. Can't really buy DAX because we haven't really got a close above that high. So it's, you know, it's forcing you to buy where you don't want to buy, which is at the high without a close. Nifty, nifty, nifty. Why don't I just create a new, let's call it nifty, nifty. Let's get rid of some Hong Kongs. Nifty, nifty. There we go. Yeah, so it's breakout mode because it's at a measured move target. That last spike failed. I think some traders might argue that's the spike and the target's probably a little bit lower. We shall see. But definitely we're at measured move target from the daily. If we go to the 60-minute chart, difficult to be a bull. So no gaps. See, there's no gaps open, except all the way up here. Nice, it looks like DAX is going to that target. So you've got no gaps on the hourly chart. You're trading the 5-minute, right? Yeah, nasty. Nasty stuff. So you've got to make a call, right? You're betting these traders are going to lose. So bulls who've got to stop there are going to get run over. Or you're betting that these bears are going to get run over. And so at the moment, if I draw a fib, we're right in the hot zone. So 50-50. You know, you buy with a stop there, hopefully it goes up there, sell with a stop here. It's probably a better buy than a sell because the bears want it to go a little bit higher. But that's what I mean. You usually want it in the two extremes to have a shot at it. If you're buying, I think your target's there because you need to take out a swing point. Then hopefully it pulls back and then hopefully you get the swing buy. But the first one's probably a 50-50 scalp or something in there. So oh, DAX shooting up. Am I doing this every day? No. Sometimes I need to get a regular schedule going. It's a bit, it's quite a lot of work to do it every single day. Kind of interferes with my trading a little bit. So, but I'm getting better at streaming. So, okay. So 3 consecutive bull bars closing on their highs on DAX. So we're up where these swing points were. So you see at the start of the session, I had these 2 areas marked up. That's what the bulls need to break for a pullback to go higher. Can you just buy and bet that we're going to launch up there? Yeah, I mean, your stop's still in the same spot, I think, so. Oh, g'day, Tom. That's it, mate. Hit the gym. I'll be hitting the gym after. So you can see that swing point, we took it out, then we took out a low, so new low. We took out that swing point. So I think the bulls need to make a higher low first before the high one's going to work. Could this just rocket straight up? Yeah, I think so. But it's pretty climactic. Okay, nice. So DAX took out that high and that high. So that's the stop. So any of those buys, I thought 19,680 was the place to be, which is this spike going up there. Okay, that's a little bit lower. So high of that spike, low of that bear bar. Okay, so that's that. Let's get rid of that now. I mean, this is a sell zone on FTSE. But where are all the bears? It's saying buy me at the top of this trading range. It's a bit climactic. Nifty question on 22nd of October. Bar 25. I'm assuming our bar numbering is the same. Is that the one you mean? Oh, yeah, get that right. Nice. Thank you. Bar 25. This one here. Yeah, that's great. So spike, and then the pullback's a pretty strong bull bar closing on its high. So usually traders will ignore that first signal because there's no tails here. It's like, oh, okay, the bulls have got something to do. So that's the first signal. So usually ignore it. That's the low 2 never triggered. So some traders will say it's the low 3 or that's a low 2. To me, it's just all a low 2. It's like the second sell signal. You could have put an order below and it got filled. And a lot of traders were waiting, so we came back to fill them all as well. So breakout point, pull back, and then you had a second attempt. So yeah, that's a good one. I like those ones as well because they're near a breakout point. So it's just a really ugly place to buy because you're buying with a target right above you and a stop here. And everyone's pushing. Yeah, we're going to get back in this range and trap all the bears. But, you know, tails, doji. You got to be really quick to get out of that trade. So we've got a spike on DAX, so traders probably looking for a pullback and then a high one buy. If that's going to be the high one buy of the century, then it's just going to take off. This to the left, I am suspicious of. See how every time it launches up and comes right back. Launches down, comes right back. Where's a bear stop? It's a difficult one. In 40 seconds, can the bulls get consecutive bull bars on the 15-minute chart? That's what they really want. Get out of this channel. On DAX, and then the secondary sell in FTSE. Just depends what the signal bar is like. It's not a great sell signal, is it? Can't wait. I'll wait and see. If you're a bull, you see this is a spike, new high, pullback, and then a high one. But I think, considering it retraced the whole move, that might have a second leg down, but trading range price action. Okay, well, there's your pause at the high of yesterday. So have we got the right measured moves marked up? I mean, it's a second entry sell, but it's just a scalp to the moving average. So it's, what's the average bar range at the moment? Eight points. 8 points is that 8 points to the moving average. You just sell a small size and then see what happens. So the trade kind of looks like that, a sell there with a stop there, you know, and you want it to go down there. Bears need to do more to reverse this. You know, if you want traders to sell up here, you need to give them something to sell. But if that's not going to happen, then traders will just assume it's going higher. If we look at the daily charts. So this is the bear micro channel. There's probably sellers up here. There's probably sellers up here, but I think those bears will make money selling higher. They'll be okay. Bulls can buy lower. If you're a bear and you sold that bear bar, I think we spoke about that the other day, about selling 3 bear bars. You see how we gapped above your entry? So these bears are stuck. So they want to sell here, get down to the midpoint down here before it goes higher. I don't want to scale in. No, if it's, we've broken a swing point, so I don't want to scale into a potential breakout the other direction. Gives you a chance to exit and then get with the rest of the direction. I think so. So the sell triggered. Probably traders selling the close or selling above, but looks like that's going to run the stop of that. Sell. And now FTSE's going to have a high one buy signal. Okay, so just rockets up, triggers the high one. So bulls are long FTSE with a potential high one, looking for targets up there. So, you know, if you're short, you can reverse above it with a scale in. Can this all just form a trading range? Yeah, sure. So now you've got consecutive bull bars above the moving average. So that's why I wasn't keen on selling and scaling into it. Yeah, so the logic to scale in is about gaps, usually, in swing points. So we broke a swing point and we pulled all the way back. So this is trading range behavior. This is the lower third of a trading range, sorry, the top third of a trading range. So if the sell is going to happen, it's not going to go far past this. Okay, that's the range we're in. So traders have tried it once and now we're going above it. So there's a chance that the next magnet is up here and here. So I don't want to keep scaling in all the way to these magnets. I prefer to take a loss there, reverse, and then trade with the bulls that way. If this turns around and closes, then we're in a bull channel because we've got a higher high, higher low, higher high. So it's still not good to sell. That's my logic anyway. Because at this point, bulls have got a higher high. And we don't know that this is the higher low until we get that new high. The moment we get that new high, now a bull trend is in effect. Where's an example on DAX? So you form a triangle. Lower high, lower low, higher high, higher low we think until we get a new high. Okay, now we've got higher lows. Now we're in a bull trend. High ones are in effect. 1, 2. Probably high ones or high twos by the time it gets up there. So. G'day Anders, thanks for jumping on, mate. I missed the long on FTSE because it's bar 1 and 2. I don't usually do too much bar 1 and 2, but I'm long FTSE. Okay, so bulls have got one close outside of that range. That's good. So next magnets are somewhere up there. But, you know, it's not all smooth sailing. How's your Nifty going? Oh, nasty. Nifty's open, yeah? Far out. Computer fun. I don't think I'll look at Nifty again. If we took a target from the 15-minute chart, looks like there's a range of things happening kind of around here. Yeah, no one wants to train that. That's exactly, and the you know, computers that are, you know, taking 100 trades a second. Hopefully they didn't stuff up the, you know, carry the 1 in the formula. So that ability to switch and scale in, that's actually a really good question you ask, because it's like it takes a lot of practice. And there's a quote from a trader I like called Peter Brandt. He trades commodities, mostly on the weekly chart. And what he says is, strong opinions loosely held. And that's just such a great quote, I think. Strong opinions loosely held, because you think you're in a trading range here, but that signal bar needed to be better. So it was a question of, okay, well, I want to sell a double top in the bottom third of this trading range for a big swing, but something's happened to that second entry short. So a lot of traders, if the close is not on the high or low, even if they sold the close, they probably only sell small, or they'll wait. And that hesitation of traders to sell, and more traders saying, "No, I think you guys are cooked. We're going above. We're going somewhere up there." That's all the bulls need. So if a trader buys up here, there's a chance they can have their stop below this signal bar. My stop's down here. Having a wider stop means I trade a smaller size, but I have more flexibility to, buy 50%, buy a lower third, scale in, scale out. I think as a newer trader, you try and trade your full size, you're scalping, you're trying to get quick points, get in and out. But then this style is a little bit more, it's kind of swing scalping. I'm trying to participate in the main move, and then if it fails, I can usually avoid a dramatic loss. Unless, everyone takes a big loss. You just get one big bar, takes out everyone's wide stops. So if you sold above that bar, this is important for bears. So if a bear sells above that bar, which is probably the first reasonable place to sell, so they sell here, they put a stop up there. They're going to keep selling all the way up here, betting it's going to fail. If it doesn't come back to their entry, that's going to be a problem. So everyone's watching this gap. Does this gap just close? Okay, well then traders are going to buy, sell. No one's going to use their full size. They're going to scale in and out, and we'll just channel. Here, if you sold above there, you got cooked. So if you feel like you missed the buy of the century here, 3 or 4 bull bars, in the past 20 minutes, it's still at your entry. I think that's a bit of a problem. You've got an 80-point stop and it hasn't just taken off. So we had a good entry bar. Okay, ordinary follow through, bit of trading range stuff happening, but the second close outside of that range. So what a lot of scalpers do, or I think they do, I can't really see my opponents, is they'll sell a range above a bar. So they sell 1 times the bar above. So they're doing this kind of very short-term scalping. I'm just going to move this to the side. So a lot of action around yesterday's high on DAX. So that high one didn't trigger. See how you got a spike, pull back. They're bear bars. Bulls want a bull bar to buy above. Didn't trigger, so that order gets removed when it's not filled. If this is a bull bar, some traders might buy above it, but it's not behaving like this one or this one. So it might be a pullback situation. No one on the 60-minute chart really wants to buy above this giant tail. So we've got 20 minutes for 60-minute traders to come in and lend a hand. If you're a bear, you've got a small stop. Where's the highest bear bar? Not even. This was a pretty good signal bar. Did we get above the high? That high is 317. No, we missed it. 0.1. I often look at the signal bars to see, okay, who took a good sell? That's a good bear bar. It's below the moving average. You're in a bear trend. If you sell, you had a chance to get back out of your entry. If you didn't, you've now got a chance to sell back at the high, and your break even is where is your break even? Down there. Wow, that's way too big. So if a bear sells there and sells more, they need to get it down here for their break even. And that's why I think having a stop there might not be the best idea. We could still have a 50% pullback. So okay, so 15-minute chart just closed. So 3 consecutive bull bars, good for bulls. Strong close on the 15-minute chart on FTSE, so that's good. Still holding long, and looks like spike and channel on DAX. If that's leg 1, that's leg 2, so we might be in leg 3 now. So see whether our hopes of $1 million trade are still live. I think we're going to run the stops of that bear bar, or at least fill them. Oh yeah, that strategy in the options market. Man, those guys spend all day coming up with that stuff, and they've got the computing power to work it out. And there's a lot of arbitrage stuff, you know, a market closes here, but it's listed somewhere that's still open, you know, so you can get one side of the trade, but it's really in the land of computers, isn't it? So I think we need to manage the trade from this bar here. What's the bar range? It's shrunk down 6 points. Okay. So I usually look at the signal bar. You know, here's a spike. It's not clear. That's the signal bar. Traders are long somewhere in here. And I'm looking to see, are they going to get stressed because we come all the way down into that signal bar? For example, when we look at the 60-minute chart, these traders are stressed. They sold it immediately, went against them, went up halfway, didn't go back to their entry. Now it's up behind their signal bar. They're stressed now because they want the market to kind of wave in and out so they can scale in, scale out, avoid a loss. But at the moment, it's not letting them do that. At the moment, it's leaving gaps. So it can actually explode to the upside if these 60-minute traders get out. The one advantage the bears have is that anyone that bought up here and got stuck probably is going to get out if we come back there. So, you know, we've all done that a few times. Big bull spike in a bear trend, buying up there, and then, oh, what's happening? Oh dear, and the stops run. Can they get one tick above that high? I don't know whether someone can check there. No, we're still there. That's the high. Can they get above that in 1 minute? If they can't get above that high in the next minute, I'll probably move my stop to break even and just ooh. Well, they broke it on the cash index, so that's good. Nice. Okay, sweet. Okay. Some bulls will just keep moving their stop up to below 33. You know, it's a breakout point and a gap. That's reasonable. So if initially you bought here, stop there, and then you had an option to scale in somewhere around here, now that you've got 3 legs up, there's no need to kind of do that. You don't want 3 legs to run out, go into breakout mode, get a bear breakout against you, and then scale in. Yeah, the bears got cooked. So hope traders are holding long and not trying to fade that move. What's a measured move of this range here? That might be actually the better range to use. The lowest bear close. Let's imagine you're stuck as a bear. Yeah, it's still 8,330. It's still up there. It just seems a lot considering the way we're doing it. You know, doji close inside. Whatever. Let's see what the trading gods have got to say. So if you've practiced selling above bars, you know, a bit more of a trading range style, this is something, it's really good to find in market replay and practice at real time how to manage the fact that you didn't get back to your entry. You've now got consecutive bars against you again, and that's when things get pretty scary. So 15-minute chart. Let me just turn that. It's a bit annoying, isn't it? Interval off. We're probably on leg 3, so I like that there's some gaps. It'd be better if they stayed open. So can you sell under 35? No, I don't think so. Some bulls might decide they're going to take profits under 35, so they're selling out of a long, but this is a first attempt to reverse. Bulls didn't want it to go below 35 and finish another leg. Gone above a 15-minute bar again, so that's going to probably be 4 15-minute bars. Probably needs a pullback. And 50% will be this breakout point, so there's probably going to be buyers floating around here. And that's the good thing about swing trading, is that if you're patient and you don't constantly take profits, it comes back and it sits above your first entry. Kind of protects that first entry. Like most of the time the market's, doing this stuff, so. No, I'm still long. I'm considering buying more below 33 or somewhere around here, but I don't know. It depends what happens on this close. The stop's really far away, so. Might take some off at close of the 60-minute bar. Because now that's got a big 60-minute bar, so it's like it's difficult to now buy here, and usually has to pull back for traders to get in on it. Nice, another bull bar. So I took some off at the 60-minute close. So I've now got some ammo back. It's a little bit, this is good because it's very consistently going up. It's parallel to the moving average. That's good. I don't know, what's that, 12 points or something. So if it gets a pullback, would I exit some? I think if you're going to exit, then just exit below a bear bar closing on its low, or at the moment, no bear bar's been triggered. So you haven't really got a signal, even if you put your stop order below a bear bar, it hasn't been triggered. Other way is to put it a scalp size below, or you're swing trading, so you're just relying on your stop. You could put it below 33, although I think 33 is a magnet, it's a gap. We could come back to 33, form a high 1, high 2, and keep going. So, would I buy above 25? Oh, you mean here? Yeah. So this was our bar 1, wasn't it? So bar 1 of the day, and I said it's probably going to work because it's in the right zone. It's in the right. Is it 50% from here or 50% from there? Either way, it's a bad place to sell. Looks like some traders are taking profit these highs. So it's not really like a 5-minute chart exit. It's more like, here's a huge 60-minute bar. We probably need to pull back. So, you know, do you just get out and just wait for either this gets a follow through, breakout, or wait for the sideways. But yeah, that worked, and then it broke out, and then it came back and tested and missed that bar. That's what I was watching. So we didn't hit that top of that bar. So if you missed the buy, now you got a buy signal. And so I thought, oh, well, it's reasonable you want to sell small here, betting it's a double top, but only do it if you can switch to long. So you're long above 19. So now I'll probably come back and test 33. Yeah, nice. I mean, it's in the zone. I had the green zone drawn up already. Where is it? When we were doing our analysis, like, okay, well, if that's the range, that's the buy zone. Boom, no chance for a bull bar down here. The bull bar's already up here, so better to be long than short above both moving averages. Couple legs up, but good for bulls. They've taken out the last bear bar. That bear bar's been taken out. That bear bar's been taken out. There's no bear bar here that has not had stress. It's up here, 330, 339. So I think any pullback in here is a pullback to go higher. So bears desperately want to get a test of the high of that bar. The high of that bar is 8308 on my terminal. You could argue, I mean, on this chart, there's no overlap. On my terminal here, there is. If you go to this chart, there isn't. A lot of traders won't use, at least that I've met on FTSE, the futures chart puts the gap as a bar, which can be a bit confusing. So that's bar one, which includes the gap up. So gap up, follow through, spike and channel, maybe parabolic wedge, 2 legs down. I think this catches a lot of traders out, or at least used to catch me out all the time. We're still all in long, but we need a pullback because traders are like, well, you know, if we were going to go up strongly, we would go up strongly. We're just kind of working our way up. Do we need to pull back to find more buyers? At worst, do we need to get closer to breakout points? So this bear bar is the first bear bar that's gotten follow through. Afterwards, it's the first stop entry sell. So usually I wouldn't touch that ever. But then that means, yeah, sometimes I miss trades. Yeah, so DAX as well. So DAX is broken out of all of this. You can see the moving average is right above those 3 bear bars here. So if we get a high 2 around there, that's probably the buy signal. One interesting scalping technique, traders sell They use these tails to enter, so they'll sell above, and then we'll come back and test their entry here. So bears can break this high low, but this is the major one. This was the signal that broke out everything out. So unless they can break this at 8,300, we're still long. Oh, sweet. Yeah, you like the drills? Mate, they helped me a lot. That's why I put them up there. Went back through all my notes, and a lot of the stuff I do every day anyway. I just hadn't articulated it into how someone else can do it. That's mad. Which one's helped the most? I haven't actually asked anyone that. Because breakout follow through, as simple as it is, that got rid of all my scaling into losers. You know, you just look at the probability of a breakout and follow through second leg. And so if I've got a breakout follow through against me, man, there's just no need to scale into it. Hi, Andrew. Thanks for joining. Yeah, the spike series. I thought so. That's a good one. I mean, that's all I did here. Spike, waiting for a pullback. That's the first high one buy, but it's the first bar of the day, and I don't trade it. So now I'm looking for the next one. Where's the next buy signal? Next pullback. So any of these in here. So even if you want to go short, that's the signal that's probably going to take you out. Okay, so let's go. Bit of higher time frame stuff. We've had an hour, so let's just clear everything out. See what else is going on. Well, DAX, we broke out of this channel. So the bulls don't want to go back in it. That's a high one after many legs up, so it might work. It might also be traders waiting for a high two, but you know, strong spike. This should get pull back second leg, at least on the 60-minute chart. Lots of open gaps. These bears not necessarily stuck. So if you sold on the 60-minute chart, the high of that bar, your midpoint, so you sell that bar, you sell the high of that bar, you want to get all the way down here. So as long as this doesn't go into here, I think we're still long. Spike ones, yeah, awesome. Awesome. If there's any area I missed, or wasn't clear, or you want more details on, just let me know so I can do some more. Two spikes, one after the other. Well, as long as you, I mean, two spikes is good, you know, spike high one, spike high one. Generally, it's the third high one that's a little bit questionable. Usually you start going into buy signal, then a little bit more of a pullback, and then another buy signal, so you switch into high twos. Where's an example of that on this? That's the bear versions. Where are the bull versions? Okay, so we're spiking up. Spike, 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 spike. So here is pullback and sideways. So that might be the high one. Usually there's a test that fails. Okay, so that's a high one. And then we've got a pullback, and then we've got another high one. So we're starting to pull into that signal bar, because it's an inside bar, it's not the world's best. Some traders might have waited for this one. Now we're starting to pull back into signal bars, so now we're getting into high 2 territory. So spike up, 2 legs, high 1, or high 2, sorry. Spike, 2 legs, spike, 2 legs. So if you get that leg count working, then you at least won't be switching. You're not like, oh, it's the top of a trading range, I better sell. It's like, no, we're just pulling back to find, because none of those traders have had to scale in. We're just still at their entry. Opposite spikes, one after the other. Yeah, trading range stuff. Oh, we just have to go up a time frame. We can see that. Spike down, spike up. And then this is common. So if you zoom into that, where's that red box? Breakout, below, back, below, up. It's absolute mayhem to trade. It's usually just better to do nothing. Like if you were short and you were waiting for your sell signal, you never got it. Now you're up here, you don't want to sell. If you're trying to buy, now you've got to take a high 1. So there's the high 1 up here. Get rid of that, get rid of that, get rid of that. See that high 1 buy signal? Get rid of that. Spike, pause. There's your signal bar. And it just goes sideways. So you had plenty of time to decide that's not doing what you want it to do. You also had time to buy below it. By the time it went below that signal and came back up to the entry, everyone was like, nah, we out of here. The market doesn't always give you that chance. Oh, I didn't get filled. Oh, savage. I had an order 1 tick above the high of this bear bar and it didn't fill me because it didn't go there. That's a bit unfair, isn't it? Okay, so high 1's still working on DAX. I've missed the buy above 39. I need to see if I get a pullback. I don't really want to. I don't. It's bullish that it missed that gap, but not sure. Yeah, good high 1s and high 2s. If you hesitate, like I just did just then, it's like you missed it. You shouldn't have 3.5 minutes to decide, oh, should I? It's like, oh, okay, that was the one. Usually I use a limit order to see if I get, the world's perfect entry. And then if that misses, I just chase it up to the high 1. Now I'm trapped out. Thanks, Andrew. Well, I mean, it should be a piece of cake, but I managed to miss that one. Well, that'll be a good one on the replay. After all my chat about spike high ones. Good one, Tim. You know what's annoying? I had my limit order at the price. I moved it up a point because I thought, well, we've got gaps here, like probably won't overlap. And then I just dragged it back down, like real cheapskate, 1 point. Come on, man. So we were using ranges before to work out targets, etc., etc. So here's a pullback. If we break above that range, traders are buying to go up here, which is where 8330, 8335. So the bear stop on DAX is up there. If you bought this spike, 3 or 4 bull bars, there's your spikes, you're almost at your target. No, you're not, you've got 30 points, Tim. And that's maybe one for later in the session. So that was one target. So where's your... Hang on, that low is 3083. That low is... Oh, okay. Okay, so they've got a tiny stop. Their stop's there. Technically, they already hit 1R. You've got to stop there. Don't know how that works. So bear's trying to do the same thing, selling above a bear bar. But you can see, once you get into that habit and it works, you can be stressed all day because it just keeps breaking out, 4 bull bars against you. You're loving this when you get out almost break even, but it's just not the way people want to trade, I don't think. So if you sold below 37, which I thought was a bad idea, the sell's above 35, which is, It's a bit frisky. Just adding fuel to the market going higher, but we'll see. So not a good bull bar on the 15-minute chart. So this is actually a spike, high one buy on the 15-minute chart in 7 minutes. So nice one, mate. Thanks for joining. Thanks for your questions, participation. Much appreciated. Well, the bars look bigger when you're live trade. They do. They look huge, particularly opposite bars. They'll get you. Just taking out support layers. Just working higher. I think I'm losing my voice. I might jump off the stream. Thanks for joining, everyone. We had a swing in FTSE, and I missed the entry on a DAX. DAX had the spike, didn't trigger. We had a high 1 and a high 2, so the entries were here. So this one didn't trigger. This one did. This one did. You can also, I think a lot of traders also just bought the close of 4 bull bars, maybe on a small size, betting they could just buy lower. And then, you know, if it's a strong reversal, you just get out and say, okay, surprise. Oh, good day, Brian. I didn't see you jump in. Thanks for joining. So it was a swing long in FTSE and DAX. So it's handy if you're able to trade both of them. If you miss one, you might get the other one. But just working higher to magnets. So, got any questions? Please feel free to send me a note on Discord, Tim F in the Brooks Trading Room. And if you're in the Brooks Live Trading Room, I'll be on the stream tomorrow. So, awesome. Thanks, everyone. I'll catch you later. Cheers.